We're going to zero in on the casino wars today, and outspoken casino bosses Steve Wynn, also Sheldon Adelson, are taking their head-to-head battle to the Hong Kong capital markets. And both are expected to sell shares in their Macau properties on the Hong Kong Stock Exchange. Meantime, there's a new mega player on the block with Melco's billion-dollar project, a City of Dreams, opening just last month. Though there aren't many gamblers going to the Macau Mecca these days, as China continues to restrict visas to mainlanders. And that's just one reason our next guest is mostly negative on the casino stocks. He's one of the top-ranked gaming analysts around, with his picks returning as much as 200% in the past 12 months. We have Credit Suisse's Gabriel Chen joining us on the program. Gabriel, I was just in Macau on Saturday, and let me just tell you what a difference a year makes. It just seems like it's a ghost town these days. Tables are empty, restaurants are empty. What's going on?
Well, actually, I don't think it's as bad as actually you witnessed before. I think on the mass market side, it has been gradually recovering. So although you may say visa restriction may still have a little bit control or negative impact on the mass market segment, but still we've actually seen, we've been seeing growth again since March this year. Mm-hmm. And then for the VIP segment, I think it still needs time to pick up because of the poor economic condition. Mm-hmm. But I think things, macro-wise, things are gradually improving. Yeah, but it's a sign of the times when you go by the Venetian Macau and you see construction being halted on these huge projects right next to, I guess, its second phases of its Venetian resort. But let me just ask you, with the problems that we're seeing for Wynn and LVS having to go to the markets to raise more money, sure, what about the local players such as SJM, maybe Galaxy and Melco? Have they been able to benefit off the problems of the foreign players? Well, I don't think so. I don't think so in this case, because I think now 5 out of 6 operators may have the need to raise funds. So LVS and Wynn already announced a plan to do an IPO in Hong Kong. At the same time, I think Galaxy may also need money to complete the Cotai Mega Resort in Cotai as well. So, and on the other hand, MPEL actually just opened the City of Dreams. However, they may also need funds to further strengthen the balance sheet as well. And all we know, everyone knows that MGM is also in some sort of trouble because they already breached loan covenant in 4Q last year. So fundraising is the upcoming trend in the Macau segment. And then on that, I talk about whether the other guys can benefit from the upcoming fundraising. I think the reason why I said negative is that right now, I think a lot of people talk about overcapacity issues. Mm-hmm. So I think the good way to look at it is not really counting the number of tables or slot machines, but looking at how much investment has been put into Macau. Mm-hmm. Put it that way, maybe before the City of Dreams opened, the total investment in Macau was close to $9 billion US. And then last year in 2008, total EBITDA among the 6 operators were roughly about $2 billion US. But now with the addition of new casinos, mega casinos with hefty investment of, like, for example, 2.3 billion for City of Dreams, we don't see EBITDA improving. Mm-hmm. So that's why the additional investment, additional money being put into Macau will actually dilute the earnings, or dilute the profitability of casino operators. Okay, well, that's why they have to go to the capital markets to get some cash these days. Well, I think the LVS Wynn case are somehow different, because for Wynn case, because their next project is the Encore in Macau, that one is already fully funded. So the IPO is more to just to raise capital to strengthen the balance sheet back in the U.S., because that's the U.S. Because the U.S. entity is more in financial difficulties rather than U.S. more than the Macau entity. Mm-hmm. For the LVS case, of course, they need to raise funds to complete the sites 5 and 6 in Cotai. At the same time, I think they would also like to raise money to strengthen the balance sheet in U.S. as well. Mm-hmm. So their issues are more related to U.S. balance sheet rather than Macau situation. Okay, well, let's talk about, I guess, fundraising then. Isn't it odd that, Sheldon Adelson and Steve Wynn can't agree on anything, and they're taking their battle now to the capital markets? Well, if you raise funds, I'll raise it before you do. Well, obviously now, although the equity markets are improving, but we don't know how the risk appetite can be maintained in the upcoming months. So I think if you look at all most of the IPOs in Hong Kong, they did quite well. So I think it's the best time to raise money. Yeah, but would you advise people to buy into their share sales? Well, it's difficult to say, because right now we don't know the deal structure, we don't know the valuation of the upcoming IPO, so it's difficult to say. Okay, it's difficult to say. Well, let's talk about their earnings, because both Wynn and also Las Vegas Sands, they will report their earnings later on this week. And let's get an update on what to expect in terms of what we're looking for in those earnings reports, and bring in Zeb Eckhart, who joins us from
the Hong Kong newsroom. Zeb.
Hey, good morning, Susan. That's right. We're going to be closely watching these earnings because obviously those casino operators hoping for a reversal in the slump that has slashed jobs-driven tourists away there in Macau. Now, both, as you've been talking about, both Wynn and LVS are considering floating shares here in Hong Kong. And as you pointed out, it's likely a case of who can get to the market first. Now, last week, Wynn filed an application with the Hong Kong Stock Exchange to sell those shares. And sources are telling us Las Vegas Sands may apply for a Hong Kong listing in early August in a bid to raise capital, obviously. Now, we're watching Macau so closely because it's a huge revenue driver for Las Vegas Sands and Wynn's. LVS earns 70% of total revenues in Macau, and it's a similar story over at Wynn Resorts, where Macau accounts for up to 60% of revenues. And in the second quarter, just to give some perspective here, the latest figures showing Macau casino revenues fell 12%. Let's take a look now at the share performance of these gaming stocks, and we see some big contrasts among the U.S.-listed operators. LVS leading the pack there, up 72%. These are year-to-date figures. The U.S.-listed arm of Melco Crown Entertainment falling in line, up about 57%. Wynn banging out a 4% gain year-to-date. We see MGM Mirage, though, those shares down 49%. And Bank of America yesterday cutting MGM Mirage's rating to neutral. Let's check out quickly the Hong Kong-listed casino shares now. Galaxy Group this year so far up 109%. It's developing a 2,000-room resort on the Cotai Strip. Stanley Ho's SJM Holdings up nearly 83% on the year, and Melco's Hong Kong-listed shares also up 82% on the year. Susan, one final point here. Analysts more bullish on those Hong Kong-listed shares, and as for the U.S. casino operators, hold seems to be the rating that's in fashion right now. We'll send it back to you.
Okay, Zeb, thanks for that update. Now, speaking of holds, well, let's talk about some of Gabriel Chan's stock picks. And, Gabriel, let's start with Melco Crown, which is the U.S.-listed partner of Melco International. It's owned by Lawrence Ho, who is the son of course, gaming billionaire Stanley Ho, and the Australian billionaire James Packer as well. Now, they just opened the City of Dreams. It's a $2 billion project near the Cotai Strip, but it's not doing very well. I mean, it seems to be catering to the wrong crowd in terms of, I guess, design, and it's having a hard time in the mass market as well. Yeah,
I think the mass market was a bit disappointing. So looking at foot traffic, according to management, they said that they have 41,000 people visiting the property for every single day versus about 65 to 67,000 people visiting Venetian every single day. However, their mass market drop was actually one-third the amounts that recorded in Venetian in the first month of operation. So I think things are gradually ramping up, but still, because the EBITDA margin for mass market is a lot higher than the VIP business. So therefore, they really need to ramp up the mass market business in order to meet expectation.
Yeah, you downgraded this stock, and it has a long way to go. It spent a lot of money on this project. We'll talk more on Melco Crown after this, and of course other gaming stocks as well, including SGM, which belongs, of course, to gaming tycoon billionaire Stanley Ho. We'll have more with Gabriel Chan of Credit Suisse after this. So stay with us here on the Bloomberg Edge. Let's continue our discussion on the gaming mecca of Macau and the gaming companies that dominate the landscape there, and bring back in Gabriel Chan of Credit Suisse. He's one of the top-ranked gaming analysts around, in fact. And we're continuing our discussion on Melco Crown, which is owned by Lawrence Ho and James Packer. And interesting, you've, I guess, downgraded this stock to underperform, and your target price is about $3, is way below the average target of analysts that we track. In fact, analysts that we've spoken to and surveyed say that there's an 18% upside on this stock. So what makes you more bearish?
Well, I think at the end of the day, it's a matter of the mass market. And my concern is that, yes, they can gradually ramp up the mass market, but at a cost. So I think right now we are not in a stage that Macau is seeing 20-30% growth year on year. So we're seeing growth only a mild 2-3% year on year growth. So that means, in order to gain market share, or in order to ramp up your mass market, you need to gain market share from other properties. So that means in order to entice people to switch from one property to another property, you need to offer them some benefits. So, for example, if I'm already a long-time visitor to a particular casino, I'm already enjoying free ferry tickets, enjoying free rooms, or sometimes offer me nice dinner at the casino. So you need to entice me to go to a casino. That means to offer something that is even more better. So that's why I think that will hurt the margin on the mass market side as well. So yes, the mass market can gradually be improved, but that will come at a cost. So that's why I'm more bearish on that. And on the other hand, I think the other difference between myself and maybe my competitors is actually on operating cost front. So I'm kind of concerned about operating costs at City of Dreams. At the same time, although they benefit from the lower labor costs at the beginning, but seems like because the unemployment rate in Macau actually dropped since May already. So with 3 casinos opening in the next 6 months or so, I think the labor cost may actually rebound in the second half of the year as well.
Okay, well, there's a Melco listed here in Hong Kong. It's of course, also owned by Lawrence Ho, listed here in Hong Kong. But you actually see less downside for this stock than you do for its sister company of Melco Crown.
Well, basically, it's because Melco Hong Kong is purely a holding company of a lot of different investments made by Mr. Lawrence Ho. So MPEL is a majority of MPEL. So I look at it more from a valuation point of view. So historically, Melco has been trading at about 20% discount to its fair value of its stake in MPEL. So I just look at the discount situation. So I look at it more like a conglomerate, that kind of thing. So that's why, based on the calculation, we see less downside for Melco Hong Kong.
How much downside are you looking for Melco International?
Well, I think a target price $3.60. So that's the.
It's more than $1 from here. Oh, watch out. Well, what about SGM? We have to talk about, of course, Stanley Ho's flagship SGM Holdings, and you're actually rating this outperform. You're expecting this to perform the best out of all casino companies in Macau. What gives it the edge? Well,
I think a couple of things. First of all, looking at valuation, it is trading at roughly about 6.5 times FO10 EV over EBITDA compared to all the other Macau casino operators. We are trading at double-digit FY10 EV over EBITDA. So looking at valuation discount is huge. On the other hand, it has the most strongest balance sheet among the 6 operators as well. So it was in net cash position at the end of last year, and it has enough financial resources to complete the next 2 openings. So they have no need to raise funds, and they only want to pay dividend among 6 operators.
And paying a dividend as
yes,
well.
Right. It's rare. It's a rare breed nowadays, to pay a dividend for for the casino operators. So it's interesting.
Well, as you saw on your screen, that stock is trading at $3.80 Hong Kong. Your target price for this stock is $4.60 Hong Kong. That's a 50% gain from here. So there's a lot of upside on this stock. Now, it's interesting, as you mentioned, SGM remains strong. It doesn't even have to give out discounts. It doesn't have to lure more of the mass market. It just seems to have a pretty dominant position.
Yes, right. The mass market is still doing very, very well. But I guess investors still have concerns about because a lot of perception about the management, whether, because it's still a family-based business rather than a more professional management team business. However, I think since the listing, the management actually improved the quality quite substantially. They hired other experts from other companies as well, so that's improving. And then I think the key difference between SGM thesis and the others, because SGM still has a lot of old casino properties or portfolio that is not really that they are not really that profitable after all. So our thesis is that SGM's earnings will improve or will grow. Actually, not just depending on the new properties will gain market share from its competitors, but its new properties which should earn higher margin will gain market share from the old properties that are not profitable. Yeah, SGM is going to launch a new casino soon. Oceanus is opening up. And it's not spending that much money. You hear City of Dreams costs $2 billion. SGM is only spending $200 million. Yes, right. So, but that one is somehow different in the sense that they are not building a new construction, new building itself. Actually, they are only converting an old department store into a casino, and then that department store is owned by the parent company STDM. So that's why they only have to spend about $200 million to convert the old building into a casino. But after all, a casino is quite similar to a department store. Easy to get in, difficult to get out, and then high ceiling and stuff like that. Yeah, you have lots of things to play with. You have the slot machines, restaurants, you name it, all sorts of entertainment. But one
about the fear of supply? As I mentioned, Oceanus is coming on. I think 2 other big casinos are opening up as well, considering, there aren't that many people visiting Macau. I guess there are concerns about, A, visa restrictions for the mainland. People, I guess they're crossing their fingers, having hope that those will be lifted soon, especially with a new chief executive in town. But don't you think those hopes are a little too optimistic?
It's obvious too optimistic because I think the 2 key data points that both Macau and the central governments are really looking at or really interested in. The first number 1 is the trend of gaming revenue. As I said, mass market, for the mass market side, we've already seen picking up since March, and VIP segment is also improving. So that's why I don't see the urgency to push forward any supportive policies. Yeah. And then also the other data point that mostly focusing on is the unemployment rate. Also pointed out earlier. So since May, unemployment rates drop, and then we have 3 big casinos opening in the next 6 months. Unemployment rate will definitely go down further. So that's why there's no urgency to push for any of these kind of supportive policies. And maybe on the political front, because yes, Mr. Choi just being elected as a chief executive, but he will only officially become a chief executive in December. Yeah. So if you were him, you would like to to receive credits of gaining the support from the central government, or you let your previous guy to take the credit.
It's pretty important.
So that's why I think. Well, I'm not saying that that will not come, but I think if these things are coming, that would be in maybe early next year.
Early next year. Okay, Gabriel, thank you for joining us today. Gabriel Chen of Credit Suisse.